What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown, and I have a question for you. What do you get when you increase drastically the total supply of money and at the same time the amount of stuff, goods, products, services, assets does not increase, and in some cases even decreases? I'll give you a hint. It's not deflation. Ready? Let's dive in. Central banks around the world are embarking on some of the largest monetary experiments that we've conducted in our world's history. Now, obviously, there are isolated incidences where there's been hyperinflation in certain countries, obviously Weimar Germany, Zimbabwe, Argentina, Venezuela, Lebanon right now. But what I'm talking about is really a global effort to devalue currencies by most central banks around the world by propping up a financial system that is built on many layers of leverage. The world is more over-leveraged today than it's ever been in history, and that's just the debt, let alone the larger amount of money and the larger amount of leverage coming from derivatives exposure globally. And so the expected response by central bankers around the world, especially in America, just print money. That's led to, number one, March posting the largest annual increase in producer prices in 9.5 years. Now, when you drastically increase the supply of money and throw it into the system, broad money, circulating money, prices of stuff is going to go up because there's not, from that, at least immediately, a corresponding increase in the amount of stuff that's being purchased. So you increase demand without increasing supply, at least at the beginning. But that's not even what's happening right now. We actually have downward pressures on supply because of the massive supply chain disruptions globally that are still happening. Part of the problem is the United States, we're printing a ton of money and we're just buying everything from overseas. So shipping containers, there's tons of stuff coming into the United States and nothing going out. Now, obviously, you have other things happening like the Suez Canal issue that cause problems because there's a lack of redundancy and robustness built into our global infrastructure and supply chains. But those only compound the issues. Those are not the root of the issues. Now, if the cost of stuff going up and setting records really in how quickly prices are going up, if that wasn't bad enough, because obviously that's a burden on the back of the middle class and especially the poor, if that wasn't bad enough, asset prices have been skyrocketing, right? This is another very obvious outcome of expanding the money supply by so much. In fact, in just the last 5 months, we've seen more inflows into stocks than the previous 12 years combined. So is it any wonder that we're seeing the S&P 500 post all-time highs? Is it any wonder we're seeing the Russell 2000 get close? Is it any wonder we're seeing the Dow post all-time highs? Is it any wonder we're seeing an explosion in real estate prices? Now, this is why it's important to measure things in purchasing power, right? Because if you look at your, portfolio and your portfolio goes from 500,000 to 600,000, but the house down the street also went from 500,000 to 600,000, you can't buy more house just because your stocks went up, because what you were going to buy with those stocks went up as well. Maybe that $500,000 could last you 5 to 10 years if you were going to use that just for cost of living. Now it's worth $600,000, but your groceries and your gas and your utilities and your rent or your education or your healthcare, that went up by as much or potentially more for some people. So your purchasing power, just because the dollar amount is increasing, doesn't mean the value is increasing, doesn't mean your purchasing power is going up. And so when it starts to look like everything is in a bubble, what you're really noticing is just the collapse in the purchasing power of the dollar. But what are you going to do? Because if you keep your money in a savings account, now your dollars aren't growing at all, and they're not going to be able to purchase as much stuff as they would when you originally put them in the savings account, which means that you're actually losing money by not investing it. And so that's one of these problems that reinforces buying assets at insane valuations, because quite frankly, if you don't invest it in ever more speculative investments, you're losing money. The system forces dollars and money to chase and go into worse and worse and worse valuations and more speculative investments to find any return that is at least equal to inflation. Now, one of the other side effects is that you have lulls in volatility followed by extreme spikes. And so this has led one large trader to place a large bet on the VIX. This is a call spread. It's about a $40 million trade, and it was placed on Thursday. Now, this bull call spread would turn profitable if the VIX rises above 25 and would reach its max gain if the VIX hits 40. Now, considering the lull in volatility that we've had over the last couple of weeks, couple of months, the decline in volatility, we haven't seen the VIX this low since 2019. Now, if you have no idea how to trade options, I'm not recommending just going in and jumping in, and just because somebody with $40 million placed a bet like this, that it means that it's a wise thing to do. It's very possible this was a part of a much larger portfolio, billions of dollars. This is just a small play, and the likelihood of this paying off is a lot less than the likelihood of it, hitting max gain. And so if you don't know what you're doing, don't touch options. They're worth learning about, and I have two options courses. I've got a beginner's course and an advanced course that I teach both in the description below. But if you don't know what you're doing, you can get yourself into trouble where you could potentially lose a lot more than you even put in. So learn about them before you trade them. But earlier I asked the question, what are you going to do, right? Because if you are losing money by just keeping your money in cash, but the only investment options out there are seemingly extremely overvalued, then what are you going to do? Well, this is one of your choices. You can invest in some of these things that have bad or crazy high valuations that look like a bubble, and then just protect yourself to the downside in case the Federal Reserve does decide, hey, overnight we're going to switch, and we're not going to continue printing money or monetizing the national debt. We're going to start selling all of the assets off of our balance sheet, and we're going to start quantitative tightening aggressively, and we just have a deflationary death spiral, and we have bankruptcies and stock market crash, and the worst case scenario all across the board. Make some bullish bets on the VIX. Make some bearish bets with puts. If you hold physical gold, buy some puts on GLD. If you have physical real estate, buy some puts on some REITs. Get a little bit creative, and as much as possible, protect yourself from these black swan events. Because ultimately it is impossible to predict the likelihood of something happening. The only thing you can do is look at what is the worst case scenario that could happen, and then protect yourself against that, regardless of how likely or unlikely you think it may be. As always, I really appreciate you guys. Thanks so much for watching. Have a good day.